Alright, so let's break this down. You've probably heard a ton about cryptocurrencies like Bitcoin or Ethereum. Think of them as digital money, but instead of being controlled by a bank or a government, they're managed by a giant public computer network called a blockchain. It's like a digital ledger that everyone can see, which makes it very secure. Now, what is trading? It's simply the act of buying and selling these digital coins. People do this on special websites or apps called cryptocurrency trading platforms or exchanges. These platforms are basically online marketplaces where you can exchange your regular money like dollars for crypto or trade one type of crypto for another. It's the central hub for all your trading activity. So, how do people actually make money from this? The core idea is incredibly simple, and it's the same principle that applies to stocks or even flipping items you find at a garage sale. The goal is to buy low and sell high. Imagine you buy 1 unit of a cryptocurrency when its price is $100. You hold on to it for a while, and its value goes up because more people are becoming interested in it. A few weeks later, the price for that same unit is now $150. If you decide to sell it at that point, you've made a $50 profit on your initial investment. That profit is real money that you can transfer back to your bank account. These trading platforms are designed to make this process as straightforward as possible. They provide you with all the tools you need right at your fingertips. You can see real-time price charts that show you the historical performance of a coin, just like you would see for a stock. They have simple buy and sell buttons that let you execute trades in a matter of seconds. You can link your bank account to deposit money to start trading and withdraw your profits when you're ready. The entire system is built to connect buyers and sellers from all over the world, creating a dynamic market where prices are constantly changing based on supply and demand. The appeal of crypto trading for many people is the potential for these price swings to happen very quickly. Unlike the traditional stock market, the crypto market is open 24 hours a day, 7 days a week. This means you can trade whenever you want, day or night. This constant activity can lead to significant price movements in a short amount of time, which creates opportunities for traders to make a profit. However, it's this exact volatility that also introduces risk. The potential for quick gains is always paired with the potential for quick losses, which is a critical point we'll get into a little later. It's not just a one-way street to making money. When you're just starting, you don't need to overcomplicate things with your trading strategy. The most fundamental approach is called spot trading, which is exactly what we discussed. Buying a coin and holding it, hoping its value increases over time. Another basic strategy is day trading, where traders buy and sell assets within the same day to capitalize on small, short-term price fluctuations. They don't hold on to their coins overnight. This requires a lot more attention and can be more stressful. So for most beginners, sticking to the simple buy and hold method is a much better starting point. It allows you to learn the ropes without the pressure of making constant decisions. Now here is the most important piece of advice I can possibly give you. You absolutely must do your own research. Please do not just jump in and buy a random cryptocurrency because you saw someone on social media hyping it up. That is a recipe for losing your money. Before you invest a single dollar, you need to understand what you are buying. Look into the project behind the coin. What problem is it trying to solve? Who are the developers? Does it have a strong community and a clear plan for the future? This is called fundamental analysis, and it's about understanding the intrinsic value of what you're investing in. Beyond understanding the project, you also need to look at the market data. This is where you look at the price charts and try to identify patterns or trends. While you don't need to be a professional analyst, learning to read a basic price chart can be incredibly helpful. You can see if a coin's price has been steadily climbing, if it's been volatile with big ups and downs, or if it's been stagnant. Many trading platforms offer free educational resources, tutorials, and articles that can teach you these basics. Taking the time to go through them will put you miles ahead of those who are just guessing and hoping for the best. Finally, a huge part of your research involves staying informed about the broader crypto market and world news. The prices of cryptocurrencies can be heavily influenced by new regulations, technological breakthroughs, or even major economic events. Following reputable crypto news sources and understanding the general market sentiment can give you valuable context for your trading decisions. Don't just look at one coin in isolation. Understand the bigger picture. Investing a few hours in research before you invest your money is the single best investment you can make. It's the difference between gambling and making an informed decision. Let's talk about something that isn't as exciting as making money, but is far more important: managing risk. The crypto market is famous for its volatility. That means prices can go up very quickly, but they can also come down just as fast. It is entirely possible to lose all the money you invest. I need you to read that again and let it sink in. Never, ever invest more money than you are willing to lose completely. Don't use your emergency fund, your rent money, or any money you need for essential living expenses. Think of your initial investment as the price of a ticket to learn. If it vanishes, your life isn't derailed. Because of this risk, one of the smartest things you can do is to start small. There's no need to dive in with thousands of dollars. Start with a small amount, maybe $50 or $100, just to get a feel for how the platform works and how it feels to have your money in the market. This allows you to experience the ups and downs without putting your financial well-being on the line. As you gain more knowledge and confidence, you can consider gradually increasing your investment amount. But in the beginning, keeping your stakes small is the best way to protect yourself from beginner mistakes, which you will inevitably make. Next, you need to set clear goals and limits for yourself before you even make a trade. This means deciding on your exit strategy in advance. For example, you might decide, if this investment goes up by 30%, I will sell and take my profit. This helps you avoid getting greedy and holding on for too long. Even more crucial is setting a limit on your potential losses. This is often done with something called a stop-loss order, which is a feature on most trading platforms. You can set it to automatically sell your crypto if it drops to a certain price, say 10 or 15% below what you paid. This acts as a safety net to prevent a small loss from turning into a catastrophic one. Finally, you have to control your emotions. Two of the biggest enemies of a trader are fear and greed. Fear can cause you to panic and sell at the bottom of a market dip, locking in your losses. Greed, or the fear of missing out, can cause you to buy into a coin at its peak price, right before it crashes. The key is to stick to the plan you made when you were calm and rational. Don't make impulsive decisions based on a sudden price spike or drop. Having your goals and limits written down can be a powerful tool to keep you grounded when emotions are running high. Once you start trading, you need to be very serious about security. Crypto exchanges are popular targets for hackers, and if your account gets compromised, your funds could be stolen with little chance of recovery. The first and most basic step is to use a strong, unique password for your trading account. Don't reuse a password you use for your email or social media. A good password should be long and include a mix of uppercase letters, lowercase letters, numbers, and symbols. It might seem like a hassle, but it's your first line of defense, and it's incredibly important to get it right from the very beginning. Beyond a strong password, you must enable two-factor authentication, or 2FA. I'm not suggesting this. I'm telling you it is mandatory. 2FA adds a second layer of security to your account. Even if a hacker manages to steal your password, they still won't be able to log in without a second piece of information, which is usually a temporary code sent to your phone. Most platforms will prompt you to set this up when you create your account. Please do it immediately. Using an authenticator app like Google Authenticator is generally considered more secure than receiving codes via text message. So opt for that if it's available. Be extremely cautious of scams. The crypto world is unfortunately filled with people trying to trick you out of your money. You will see promises of guaranteed returns, fake giveaways that ask you to send a small amount of crypto to receive a larger amount back, and people impersonating support staff to ask for your password or private keys. A legitimate trading platform or its employees will never ask you for your password or tell you to send them your crypto. Be skeptical of unsolicited messages and too good to be true offers. Always double-check website URLs to make sure you're on the official site and not a phishing lookalike. To summarize, crypto trading can be an interesting way to potentially grow your money, but it's not a get-rich-quick scheme. It starts with understanding the basics. You make money by buying low and selling high on a trading platform. Success requires you to do thorough research on any project before investing. Crucially, you must be aware of the high risks and be prepared for the possibility of losing your investment. Start with a small amount, set clear goals and limits to control your emotions, and prioritize your account security with strong passwords and 2FA. This is just the beginning. Continue to educate yourself, learn from your experiences, and trade smart.